Hello everyone, my name is Marcello Kolax and today I am back with another TTF front month analysis. First things first, I hope you do realize that I do have a little bit of a better microphone now. I switched from an old headset to an actual, good quality mic. Hope you appreciate that. Next thing is that in previous weeks I've always run through quite a lot of markets. I did TTF, NBP, Brent, carbon and coal, and I just walked you through the entire week. How about we do something different today? Today I will only look at the TTF front month, but I'll slow down and I'll walk you through, starting at a blank chart, I'll just walk you through my entire thought process. So maybe you can implement a few tips and tricks that I'm usually referring to when I do my analysis. How does that sound? Okay, let me know in the comment section, or if you, if you know who I am and you have my WhatsApp, you can tell me there as well. Okay, we are looking at the TTF front month on the weekly chart. So one bar represents 1 week of trading, and we do have the 200-week exponential moving average on here. Why did I choose the exponential over the simple moving average? Well, it's simply just a little bit more sensitive to price changes. Right now it's more or less flatlining, so it doesn't really matter all that much, but later when we go into the daily time frame, it does matter a little bit more. I am also on the log chart, and simply because you use log charts when you do like a long-term outlook, you really want to look back, you can see 2016, 17, 18, or if the market has been extremely volatile. So of course you can't, I mean you can, but you can't really do an analysis on the normal chart, so we just go to the log chart instead of the arithmetic chart, because you can't really draw on any trend lines here. So let's start with a log chart. First things first, identify the underlying trend. So obviously we do have higher highs and higher lows. You can see I'm really going back 2020, and we have retraced. We started making our first significant lower high in November 2022, and we did push below the preceding trough. I mean, this year's a new one built, so we pushed below that in December 2022. I'm going really far back. I'm really going very basic here, so we're all on the same page. Yeah. So obviously we are retracing this big long-term uptrend. How far are we retracing? Well, I'm just starting here. I put in some fibs. Usually at any, I don't know, standard textbook correction lower, we go to the 61.8% fib retracement, which is around 20. So we have we are more than halfway. We are nearly there. And depending on how accurate you want to have it, this could be considered hit almost. So we are nearly there. So I'm just quickly removing that for chart clarity. Next thing I want to do is I put in the major support and resistance levels. So we can see that the big resistance levels are probably the 200-week exponential moving average, which will be really important later on if we ever were to touch it. Then of course a little bit closer in, we do have something somewhere around this. I could have gone here, all the way here. That's possible too, but the wick is quite high, so it might not be representative of the market, but I'm just putting it in for now. And the third important probably fib retracement is resistance level is if you put in some fibs, because can you see now we are seeing this midterm downtrend is retracing higher. So now we are trying to see how high we can go. So we haven't even touched the 23.6% fib retracement yet, which means anything here in this area is still considered noise. So the overall direction is still lower, right? So if we were, however, to push above the 23 and towards the 38.2%, then we would be dealing with a real extended midterm correction. And can you see how the 200-week exponential moving average also coincides with a 38.2% fib retracement? And we are like in the, I don't know, 69, 65 range. So this is quite a bit of a psychologically important, like, round number to hit. But we are not even there yet. Right now we are still in noise territory. So that's where we are for now. So I would say that we are in a menial upside correction to the long-term downtrend. And of course, we could draw in resistance levels here, 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 and here, but only put on the chart what is actually going to help you immediately. And for now, it is helpful, I will keep it in mind, but right now we'll just clutter up the chart a little bit. So next thing I do is probably I'll go put my resistance level further down here, because I do think that the 23% is quite meaningful. Probably more meaningful than this higher wick. I put a 38.2% fib as a important resistance level. Okay, that's good. And we could go one higher, maybe the 50% retracement at 88, but we'll leave that for now, because at this point it would only clutter the chart and not add any real value to it. So this is our R1 and this is our R2 for the weekly chart. All right. Let's have a look at some support levels. Okay, so here once again we only draw on important support levels. So what would be meaningful starting here? Well, it would be meaningful if we start making a new lower low. So I'm choosing this as an important support level, and we call that just S1. W means for the weekly chart. Where is it? There you go. And so moving below this would mean that, yes, this correction is over, this upside correction, and the downtrend is continuing. So that's why I'm putting this in. So if we break below this, what is the next target? So let's have, at this point, we have to start looking a little bit into the past, because we have nothing really going on here. So the next important support level is quite far behind. It's from February 2021. So let's have a look at that, and we will call that S2 for the weekly chart. And this is important, right? And now we could, of course, go on and put the S3 here and look for other important lows. But right now, this isn't really relevant. So we'll just stick with this. What always helps is looking for a trend line next. So I can see that we do have a peak and we have a lower peak here and an even lower peak there. So this is a really good trend line that held 3 times, so it's confirmed. And the first thing that I usually do is, as soon as I draw a trend line, I try to turn this into a channel. Boom. And there is one. And what do channels help with? Well, they help you with like going, taking the smaller swings. So we are trading ideally with the downtrend. I mean, if depending on who you are, if you can speculate, yeah, you might not want to take go bullish on the up legs all that much. If you have like a longer term view on a daily chart, these up legs can last for weeks. Yeah, so that's something different. But the idea is to always trade with the trend. So the trend is your friend. So in a medium-term downtrend, we would start looking for, on the daily chart, we would start looking for near-term down legs, because they are usually longer than the 1, 2, 3, 4, 5 weeks of an up leg that we have here and here. Also, if you are, I don't know where you are, if you are, for example, utility, and you have your purchasing window and it's still open, maybe if you can, you might want to, if you're at this point in time or at this point in time, you can wait out until we are heading lower again, yeah. But it's always risk management needs to be in place, so of course this isn't trading advice. All right, okay, so now we've achieved quite a lot without looking at any mathematical tools. So we are in a mid-term downtrend, we are below the 200-week EMA, we do have a bearish engulfing, so the red candle is engulfing the body of the green candle here. Okay, so that's happening, so that's a bearish signal. We are at the upper trend channel boundary, so that usually should offer some resistance, and we are still in noise territory. So what is my assessment? Bearish, medium term. But in order to confirm that, TA is just puzzles, yeah, just putting puzzle pieces together. I'll start looking at how about we start looking at the MACD, the moving average convergence divergence. So we see for the MACD that we are still below this zero line here. So this is the zero line. That means we are still bearish. However, this here, this bullish crossover, is a preliminary bullish signal. I wouldn't Situation dependent. These here can offer earlier bullish signals than actually waiting for a real crossover. But as you can see here, it can cause whipsaws if you are entering a sideways trend. So I find this usually a little bit more dangerous. So what I would do is I would not take a bullish signal here because we are not really above the trend line. We are still below the was it a 23 point was it 8 or 6 fib, and we are still below the zero line on the MACD. So there's no bullish signal here at all. So the bear trend remains intact until there's irrefutable evidence that it isn't. Just for fun, I know a lot of you probably look at the RSI, so I'm looking at that as well. As you can see, there's not much value derived from the overbought and oversold signals right now. So I like to use the RSI more or less as a momentum or trend tool as well, where you see, okay, so you do have lower lows and lower highs, so it's still more or less everything in line with the bears. I prefer, just as an oscillator, I usually prefer stochastics because it does give earlier signals. Can you see here? We do have a little bit of a crossover, so we have the %K crossing below the %D, having blue cross below orange. Even before we have hit 50, the midpoint, that's overbought, that's oversold, which is in itself a little bit of a bearish signal. And yeah, would be in line with our assessment. Okay, so that's what we are exactly assessing here. So for the midterm, right now, overall, the downtrend is in place and there's a chance for the downtrend to continue. Just for fun, if you're looking at something completely different, if you're looking at the Ichimoku cloud, just putting that on, we can see we are well below the Ichimoku cloud. We have a red cloud ahead. It's all looking bearish. I'm just going through a few fun things. Yeah, we have Bollinger Bands. Just putting those on, you can see, okay, so they have narrowed just a little bit because we have a little bit of a sideways range going on here, but we are not even above the 20 exponential moving average. That's the midline of the Bollinger Band, so it's all looking still fairly bearish. All right, bearish it is for the midterm. Let's have a look on the daily chart. What's happening here? Let's remove this. Of course, you always start zoomed out, and here you can see I start with a blank chart as well. Yeah, so all the drawings, they're only visible on the weekly chart. Let's have a look on the daily. Okay, so what's happening here? We are just zooming out. This is the whole leg, up leg, right, and now we have a down leg, and zoomed in onto the daily chart, we can make better use of these swings. That's also on the lower level time frames. That's where you often get your earlier signal. So the lower level time frames move before the higher level time frames do. I stay on the, so that's the log chart, and now we're switching to the arithmetic chart. Yeah, so just so for you to see the difference, you can see this is like very steep. Whoop. But if I keep the logs on, it's a little bit less scary. I'll leave it on the log. But at this time frame, when you really just go from one day to another and zoomed in so much, the difference is almost non-existent. Yeah, so it only matters when you're zoomed out. But for consistency, I stay on the log chart. All right, okay, so what is happening? We are in this underlying downtrend channel, which I actually want to put on. I have it on the weekly chart, put it on the daily as well. There you go. Adjusting it a little bit to make it pretty and presentable. And as you can see, this up leg started at the start of June. We have moved higher, and now we have this, like the market is moving in an increasingly tighter range, which could be defined as a flag. No, let's not use this. Could be defined as a flag. And a flag usually is a bullish continuation pattern. Okay, this isn't pretty. This is not pretty. Oh God. 1, 2, A, B, C, D. Okay. Not good. But usually these mini triangles or flags, they usually are hesitation patterns before the preceding trend continues, and they do have very clear targets, and it is usually the length of the preceding leg. It's this, and then applied to the eventual breakout direction. Ooh, can you see that really coincides with the 200-day exponential moving average? So that's interesting. However, as you can see, the trend remains in place until it isn't. And right now, near term, we're in a sideways trend. Medium term, we are still in a downtrend. All of this here is just wishful thinking. So don't take any bullish positions until something actually happens, okay? So, apart from this wonky triangle flag that I drew on, we can, sorry, pennant, oh my god. We can also make this a range. There you go. So I would say, so now we are starting to look for horizontal support and resistance levels. This here, we can put it in, but it's a little bit unrepresentative. It's quite high, or we just put it there, just in case it becomes relevant later on. Let's give this an R2 maybe. The more important resistance level is actually here, because can you see that's the body was hit here, was nearly hit here. So I think there's way more representative of what the market is looking at right now. So we're giving this an R1, so that's important. And then of course here now I'm more confident to put in the R3, so the third most important resistance level, and that's simply the 200-day exponential moving average, which is also, as you remember, the target for this continuation pattern. Let's have a look at support. All right. On the support side, I would say this here doesn't look all too stupid as one. And then we have a really nice range. So you can see boom, 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 boom. And now the market is moving in an even increasingly tighter range. So I think this is pretty. If we were to break below this level, the question is, what other level would matter? Well, of course, it would be the most recent trough, and I'll put in this. And there's not much in the way. So the idea is, if we were to break below here, there's nothing in the way until here. If we are to break above here, there's nothing in the way until here. And if we break above here, there's nothing in the until here. So you can see technical analysis is a bunch of if-then statements. If the market moves until here, then we are most likely to move there. And that's the beauty about TA. So you're not trying to like forecast the price. You can see how hesitant I am with like saying whether or not we are going to break higher or lower. The important thing here is really just to wait it out, and TA helps with adequate stop placement. And if you have a target and if you have your stops, so entry and exit stops, that helps you with your risk management. You can very easily calculate your risk-reward ratio, right? So TA is not a crystal ball, it's just taking the temperature of the market. All right. Now we are in a near-term sideways trend. A little bit of a congestion here with the potential to move higher, potentially to test the 200-day exponential moving average resistance. If we were to break lower, however, we would simply continue in this mid-term downtrend channel. Let's have a look at some tools. What do they say? So we'll start with a classic MACD again. I'll just maximize that for a little bit. So what is that telling us? Okay, so we do have higher troughs. There's not quite. We are making a new higher high. I'm just zooming in. We're making a new higher high here. Okay, we're making higher highs here. Yep. So what does that correspond to on the chart? So the market is moving lower. Okay, but we start having the MACD moving higher. So that means the bears don't have their heart in it anymore. So this in itself is not a bullish signal. It's a warning. Okay, it's a warning. For some, it's a warning to simply actually place a stop here. For some, it's a warning to lighten up a bearish position. For others, it simply means you actually start looking at the chart a little bit more closely onto the, like, let's say, hourly time frame. Yeah, whatever that means for you, it's definitely worth paying attention to this area here this week. So we did have a preliminary bearish signal, but as you remember, I don't really like those, especially now that we're in a sideways range. So I would disregard this here as a true bearish confirmation of any sorts. When it gets more interesting is maybe when you break below this MACD zero line, but in those sideways trends, it's best to not look at tools that are moving averages or based on moving averages like Bollinger Bands or MACD, because they just start flatlining and give you really a lot of false signals. Yeah. Okay, cool. So anything else? Let's have a look at stochastic just to see what's happening here. All right, so we are still sideways. but the stochastic starts moving lower significantly, so maybe there's something in it for the bears here. Just for fun, I'm looking at the Ichimoku cloud. I know it's getting way too busy now, yeah, so don't do this. I'm just putting it on for fun. Oh god. So we can see that the cloud, that the price still remains below the cloud. Now we enter the sideways trend, which means you shouldn't use the Ichimoku cloud anymore. So we remove that. Anything else we can look at? I think that's about it. All right. Okay. So what is my assessment? For now, trend remains in place until it isn't. So for now, the idea is sideways. Looking a little bit closer, we do see that we have a bullish harami pattern happening here. Not quite confirmed by the stochastic, but that would allow for a marginally stronger start into the week, followed by probably a little bit more moderation. Yeah, so we can't, once again, it's not a crystal ball, but if we were to move, where is it? If we were to move higher, then we could easily go here, and if this wedge, if this mini triangle, this pennant is resolved, then we could easily see the 200-day exponential moving average. If, however, all of this breaks down and we do see more bearishness, then I could see this happening, probably until here. But until any of this happens, we remain neutral with a potential for marginally stronger week. And as you can see, one more word. So of course there's a difference between technical analysis and actual trading. So you can see we are only trying to establish the potential direction, because I'm talking to hundreds of people here potentially. So I'm not giving out trading advice. I'm just telling you where the market could be going or is most likely to go, when you know that the market is actually going into that direction, and also when our assessment is wrong. So TA helps you to get out of bad trades earlier. But you can see this is just the first layer of trading, knowing where the market might be going. Next step is actually putting on stops and targets, yeah. So entry-exit placement. And the third part of trading, of course, is risk management, which is much easier if you have your stops in place and your targets. So yeah, that's about it. That is the TTF front month. Let me know what you think. So in the previous weeks, I was always going through the specific markets. How do you like this year? A little bit better, maybe? You can find me on LinkedIn. My name is Marcello Colax, and yeah, connect with me there. I post daily, and you all have a wonderful start into the week, and see you around next time. Thank you, and bye-bye.